Thank you for joining us today for Next Generation SAP Payments, Mastering SAP Advanced Payment Management. Today, the focus of our session is centralized payment processing in finance operations infrastructure for a modern enterprise. Our sponsor, Serrala, is trusted by more than 3,000 customers globally and has a team of over 800 delivery experts. Their treasury services were some of the first to implement SAP Treasury solutions for cash management and advanced payment management for in-house banking. Our speakers today are Peter Wolf, Managing Director of Treasury Services for Serrala, Jatin Thacker, Director of Treasury Services for Serrala, and Dr. Arif Esa, Vice President of Treasury and Working Capital Solutions for SAP. As we get started, I have just a few logistics for you. On the left-hand side of your screen, you should see a box that says Q&A. If you hit the ellipse that's at the bottom of your screen, the Q&A button will come up. If you have questions during our session, feel free to click on that button and ask questions. We will answer them at the end of our session today. We do have some polling questions, so I always like to encourage everyone to participate in our polls for today. And at the end of today's session, Sean and I will be sending out to you a copy of today's presentation, so don't worry about trying to download it during our session. And in addition to that, Serrala will be providing you with additional resources. As we get started, I just want to tell you a little bit, for those of you who may be new to SAP Insider, a little bit about our community. We have over 2 million members, about 50,000 companies across 150 countries. About 50% of the people who are in our community are line of business experts, and about 50% are technology professionals. As we get started, we also want to get to know you a little bit better. So we have some polling questions. This is really important because it helps our speakers really tailor the conversation to you. So with that, I'll let Sean open up our polling questions. Our very first question for you is, where is your organization today on centralizing its payments processing with SAP? Do you have multiple local payment processes in each ERP? Are you partially centralized? Are you largely centralized or working on becoming centralized? Or are you already fully centralized?
Excellent. The results are rolling in here. Thank you, everyone who is participating. We'll keep this open for just about maybe 15 seconds or more. So if you haven't had a chance to respond yet, please go ahead and make your selection. And then, Susan, I will let you know where we stand.
Fantastic. Thanks, Sean.
Excellent. Thank you, everyone who has participated so far. It's interesting on this specific result is it's a little bit somewhat equally divided. However, I will say that the largest portion of the audience is saying largely centralized on a single SAP instance, but with exceptions. And then the next two are partially or fully centralized payment factory. And then the lowest, probably about 5% of the audience, says multiple local payment processes in each ERP.
Oh, thank you, Sean. Interesting, largely centralized in SAP. Well, it will be great for our audience to hear our speakers today talk a lot about SAP payment solutions and how they can assist the audience in ensuring that they are at a fully centralized stage. And really, you're going to hear in a little bit, we're going to provide some data for you about some of the key strategic initiatives that CFOs are really thinking about for 26. And payment centralization actually is on the top of the list. So exciting opportunity. Our next polling question is, what is your primary business driver for evaluating advancing payments? Why are you here? What makes this an important topic for you? Are you looking to reduce bank and transaction fees by managing or routing optimization in in-house banking? Are you looking to improve real-time cash visibility? Are you looking to simplify multi-bank connectivity and not manage that anymore on your own? Or are you really looking at the GRC end of it? Are you looking to enhance your compliance controls and the auditability of your payment operations?
All right. Once again, thank you everyone for your participation. Let's see, we've got a large number participating so far, but I'm going to give it maybe about another 10 seconds here just to get those few stragglers in, and then we'll go with the results here. Excellent. Thank you again for everyone who participated. Let's see, here we're seeing that about 60% says simplifying multi-bank connectivity and payment formats. And then kind of equal here on improving real-time cash visibility and enhancing compliance. And then again, kind of at about 5% here, reducing bank and transaction fees through routing. Optimizing comes in at the last.
It doesn't actually surprise me. I'm really glad to hear simplifying multi-bank connectivity is really top of mind for people here today. Thousands of bank connections, and especially in multinational organizations where you're doing a lot of mergers and acquisitions, or business units have their own payment structures, right, and or products are driving that. This is again, a great session for you to be in to hear about how you can centralize that and simplify it in the organization. Which SAP payment scenario is most relevant for your roadmap in the next 12 to 24 months? Which payment scenario is most relevant for your roadmap in the next 12 to 24 months? Again, we really appreciate you answering these questions. This is really helpful to set the stage for our speakers today.
Excellent. We'll give it about 15 more seconds here, just any stragglers, but we are seeing some great interaction here. Again, as Susan said, really appreciate all of the participation here. It helps us shape the conversation. All right, let's see here. We have, I would say, let's see, about 50%, 55% are saying payments on behalf of in-house. And then again, an equal spread on payments in the name of, and we are still focusing on getting basic automated AP, AR payments in place. And then about 10% of everyone here says international or intercompany payments, including netting.
That's great. I mean, all three of these topics are things that Serrala can help those of you who are here with today. I know we have a very strong focus today on payments on behalf of, and also payments in name of as well. So again, just really glad to better understand what your needs are so that we can really focus on making sure that this session is valuable to you. Before I turn it over to Peter, I want to make sure that I set the stage for you. Just as background, I'm the analyst that covers tax, GRC, and finance for SAP Insider. This year we launched ask leaders to tell us, hey, what are your priorities as we move into 2026? 85% of them told us that they were optimizing financial performance and wanting to improve risk. And here is the challenge, yet only 8% of them have reached a level for maturity where finance systems are integrated. Most of them, 50% of them, indicated to us that they're still operating in a place where they're operating in silos. And you might be sitting asking yourself, well, why is that important to today's session? We followed that question up, asking about what they were focused on in 2025. No surprise, most of them told us in their transformation and in the migration to S/4HANA. But even more importantly, what you can see here is that 46% of them told us that they are looking for a way to create end-to-end automation for payment processing. And if you look at the data closely, what you'll see is this ranked higher even than AI preparing data and integration for AI, as well as training for AI. So this topic is very relevant and top of mind for many people industry-wide. So we're, again, very excited to have you here. With that, I'm going to turn the floor over to Peter and let Peter tell you a little bit about Serrala.
Okay. Okay. Hello. I can see that I'm talking, but I don't see myself on the screen. I'm not sure if I'm visual right now. So I appreciate the opportunity. Thank you, Susan, for the introduction. Again, my name is Peter Wolf, Managing Director, Treasury Services. I've been in Treasury Transformation for 25 years. I think it's really important that this is really a great panel. I have here John Thacker, Director of Treasury Services, and Dr. Arif Esa. Between the three of us, we have over 50 years of experience in SAP and digital transformation, SAP Treasury, finance, debt investment derivatives. So I think we have some insight here that I believe will be helpful. We've been in the trenches. We've lived this. We've gone through the pain of what doesn't work, and we've seen what does work. And I think we can bring some insight. There's plenty of details on here, but our background is we've been doing this for 25 years, focused on SAP Treasury transformation, finance transformation. 60 of the top Fortune 500 companies are companies we've helped to transform. We're on the leading edge, delivering the latest technology, including the APM and in-house bank in North America, but we have global footprint delivery around the world. So we're excited to have this conversation and to talk about these topics. So we can go to the next slide. So I think what's really important here, Susan brought up a couple key points. I think there's an ambition gap. There is a gap between what companies are saying they want to do, what they're striving for, and what they're actually doing. And right now, we want to talk today about this next generation enterprise payments automation. This is a mechanism that will enable you to overcome that gap, right? 85% want to be strategic, 85% want to reduce their risk. 54% are moved to S/4HANA, but only 17% have their fully integrated finance systems. I mean, that's huge. When you're talking about that few number of entities, now the polling responses seem very positive that the number of people here, maybe this is the team of the vanguard, the companies that are on the front edge, but this is really important, insightful information that most companies are not performing at that level. And I think there's insight, even if you are on the cutting edge, we can bring insight into how you can take more advantage of that and close this ambition gap, have systems deliver on what you're trying to achieve and SAP is coming up with the tools to be able to do it. If we go to the next slide, this looks chaotic because it is chaotic. That's the current world. This is what we see around the globe. Generally, for most organizations, they have disparate systems. They have manual inputs. They have a variety of different formats, different bank connections, different ERP systems. Now, I heard that the responses here were that many of the attendees here are on a single system. This is still applicable to even companies on single system. They still have the issue of other instances integrated into their systems, multiple bank connectivity typically. And one of the responses was that multi-bank connectivity is one of the biggest topics that people are interested in looking at today. So we'll definitely get into that. Managing those connections is really problematic. It creates friction, it creates cost. Every time you get a new bank, it's a new implementation. There's no efficient model in the legacy world, at least. You have host to host, you have Swift, you have all these other connections that create challenges for management, maintenance, ongoing support. And we're going to talk about the solution that allows you to overcome that. And Jatin, I think maybe can you make any comments or
Yeah. So
comment to this topic?
yeah, sure. So as Peter said, the key message is, whether you may have a multi-system, the single system, or you could have a situation where your ECC, you have today one ECC, you're trying to migrate into S/4HANA, but at the same time, you don't want to do a big bang, right? So you may have a migration path where you're eventually starting with few company codes on S/4HANA, and then eventually on a phase-out approach, you want to move everything to S/4HANA. So, a couple of examples, how SAP APM, can deliver strong benefits irrespective of the landscape. We had a customer with the similar, they had ECC, they had S/4HANA, they wanted to move in the migration path, but they wanted to take a benefit of the APM, right? At the same time, they wanted to go slowly, make big changes on the ECC. So we implemented a hybrid model where the S/4HANA system with the limited company codes, we took the opportunity to migrate from the old payment methods or old payment file formats they had. The ECC, the companies who stayed on the ECC while they were on the migration path, they continued to use the old IDOC based payments. Again, I'm more talking of the in-house cash based on the polling. We use the standard functionality of SAP APM where they could continue to use the IDOC on the ECC, and instead of using their individual connection with the banks, whether they have the FTP or even they have the Swift, but each system were managing their own processes, all the payments were routed through APM with the single embassy connectivity. We'll talk about more in the next slides, but as a result, the customer could achieve the minimum disruption to the ECC. At the same time, they could modernize the payment formats for the S4 migration path they started with. They could take the advantage of the centralized sanction screening. They could get the visibility of the end-to-end payment, and based on the poll, the MBC. We'll talk more on the MBC, but they now had the single bank communication channel. The other things that we have seen is even though you may have single instance, but we had other customers that they were going through frequent mergers and acquisition. They had a lot of diversification. So APM again can integrate those new legal entities, coming through M&A. They could quickly enable the non-SAP systems with the standard converters available on APM. So APM can take a lead where they can take ownership of the file format, changes and everything, so they can connect to the systems and take the advantage of APM. The other case where they still had the single instance, they had AP payments, they had Pino, they had in-house banking and so on. But the big challenge was they had multiple file formats. They were using old, file formats. They were using XML. It was a mixed breed solution they had. But the biggest challenge was they didn't have the centralized payment visibility. So after we implemented the APM, they could gain a lot, right? They don't have to worry about the file format mechanism changes, which is coming up, with the new formatting requirements from the banks. They could gain end-to-end payment visibility. So irrespective of the landscape you may have, SAP can deliver strong benefits to the customer.
Awesome. Thank you, John. So again, it appears there's some technical difficulty that my screenshot is not coming up unless you can see me, John. I'm not sure.
Yeah, we can see you, yeah, as
Okay,
well.
great. Because when I'm looking, I see you guys instead. So
Yeah,
that's terrific insight. Arif, do you have anything to add there? I mean, I know we're tight for
yeah,
time. I want to
I
try and move,
think
but yeah,
I just know only one comment. As you say, there is no need to have a big bank if it's come to advanced payment management to have in one single system, but rather than to have a side by side, what you mentioned was the hybrid. And then we see that's more and more as a kind of two-tier where the customer started with payment, cash, and risk as a step approach to harmonize the system. Because at the end of the day, and Susan, back to your point, why the customer rated the end-to-end automation more than the AI, because the foundation of AI is really the automation first, the data
absolutely.
first. And that's why the data silos on the slide before, indeed, that is the bottleneck if it's come to automation and productivity only if you have everything in place. And that's why either one system approach or hybrid solution side by side. But
Excellent.
more on that later on, yeah, maybe.
Yeah, excellent. No, and we will definitely get into those topics more. Thanks. Ultimately, what we're talking about here is a strategic shift from legacy, old world, disparate system, disconnected, with mixed formats and really lack of central visibility. We're talking about a move here, a technology that enables you to make that strategic move. Payments is no longer back office. It's strategic infrastructure. It's necessary. People talk about wanting to be strategic. Now this is the way you achieve it. So payments, when they're fragmented, that leads to you can't be strategic in finance if you're fragmented. Unified lets you become predictive, lets you have that visibility, that insight, and be effective in real time. So ultimately, this solution we're talking about is a backbone for CFO digital agenda, right? The ability to bring it all together to get that insight. So on this slide here, we're talking about the costs. I mean, obviously, the costs go across all teams, all organizations in the finance area and technology. The CFO can have visibility. If someone at the board asks, where's the money right now? Where's your exposures to the bank? And he can't explain or give an answer in real time because the interfaces he has are 2 days old to get information from the bank. That's not a viable situation when you're talking about the volatility we have in the market today. Exchange rates, COVID, all those topics, banks are at risk, counterparties are at risk. You need to have that information real time. That goes across all teams, Treasury with visibility. One of those key facts that was mentioned earlier in a survey result, 93% said that they had avoidable losses because of inaccurate forecasting. That means if there's 100 people, and I think we have more than 100 people on this webinar, only 7 of you are at companies that have not encountered this recently. So that's huge. This is something you have to address. This is avoidable losses because of lack of visibility. And these solutions we're talking about give you that visibility. They give you that capability to access information in real time. IT, they have the cost of the infrastructure, integration, banks constantly changing, accounts payable. They're paying vendors late. They don't have the visibility when the payment's made. Vendors call in and ask about where's my payment, and nobody can find the tracking of it, right? That's where the central visibility creates efficiency, automation, insight that allows you to be more effective dealing with your counterparties and internal teams and costs. So we go to the next slide. So ultimately, what we're talking here about is this pooling together of these functions. What functions are we talking about? We're talking about APM, that's Advanced Payment Management. You can think of that as the factory. That's the factory. It's a unified transformer. It can take essentially a variety of formats, transform them all into a common single format, that ISO 222 format. That's important. We'll talk about how that impacts on information, insight, and on AI critically, the structured data. In-house bank, that's your internal mechanism to manage liquidity and other processes, but ultimately to manage liquidity effectively within your organization across. You're acting as a virtual bank for your internal entities. We'll talk about the details of that. And then multi-bank connectivity, which is the connector that brings it all together. So you have this You have this intelligence funnel, universal translator. You have this internal liquidity engine with advances now in technology to make this accessible to really all companies on a cost-effective basis. And then ultimately the single secure cloud-based solution that connects to all banks externally. So this is the foundation we're talking about. This is not incremental. It's not execution. This is transformational. This is strategic. Your organization has an opportunity to take advantage of these mechanisms and really change the dynamic within the organization. One standard data structure, one orchestration layer, one multiple execution models that we'll talk about going through a unified visibility. All right, next slide. And on many of these, there's a lot of topics we could go into deeper, but we are time constrained, and we're very happy to follow up. We will provide more information. We have lots of information on our website, detailed information. Also, to this topic, we're dealing with both trying to talk to business people that are attending, audience members, and technology. Some people want very much the details about technology. Others want what's the process, what's the strategy, and we're going to try and to branch across those and cover the topics reasonably for everyone. But we're more than happy to connect with you after this and provide more specific insight in the areas you're interested in. Ultimately, this slide is just talking about old world to new world. This is transformational. It is next generation. Legacy in-house bank was called in-house cash. Now we have APM, IHB, advanced payment management. This is new investment, new interface for the user, new configuration, new master data, much more flexible than the old solution. Legacy BCM, bank communication manager, now integrated APM and BCM, unified processing, approvals and monitoring, much more advanced and user-friendly, user-controlled. And then legacy bank connection. We already talked about multiple connections now going through a single pipe. This is the foundation of what will enable you to make this strategic leap in the future. I mean, anything you guys want to add to this particular slide?
Maybe just to add, maybe the two aspects. The aspect of the approval, Peter. Even though we move from legacy to the right, from the left to the right, there is a huge innovation in the area of approval, because approval can be functional approval, can be you name it. There's a different approval step. So the good news, we harmonize the former bank communication management and the approval step on the advanced payment management into one unified process, as you say. That is the good news. That's the one in the middle. The second is we see more and more API, as we mentioned before in the slide before, heterogeneous system landscape, old, outdated interface. API becomes, so think about instance payment, instance balances, and so on. So NBC is indeed not only to connect to the bank, but rather than offer the next generation of payment, be instance payment, be instance notification. Imagine if you have a pre-notification of account on the fly before you send any payment to avoid fraud. It's all the things on the right side. It's not only we move, lift and shift, but rather we innovate in the right side as well. It just only
that's key point. That instant payments is the world that we're getting to, and that makes fraud protection even that much more important, right? If you make a payment and it's gone immediately and you haven't done your fraud protection, you're at higher risk. But so critical points. One other thing I want to bring up, because I know that the audience may not all be familiar with the term in-house bank. And I think over time, one of the ways that I've thought about this that seems easily consumable is if you think about a parent with several kids that are teenagers or slightly older that go to college, and you give them some money and they pay their bills themselves out of their own bank accounts, and you trust that that's all happening, but you don't have visibility. You know you sent money to them. And then when the bigger bills come up, like paying tuition, you pay that out of your own bank account, right? So if you kind of think of that, I think that's a model that you can think of. The centralized bank account is where the headquarters, the owner, can make the big payments, the risk payments, the foreign currency payments, the ones you want to be sure get done and paid on time so you don't get charged fees. And then some stuff's done locally because, well, it's a local store and local shop, local vendor, easier to take advantage of or easier to facilitate. I think that model of thinking about it is a good way to think about an in-house bank. It's a virtual bank that serves the same purposes as an external bank, but you're doing it internally and cutting costs and being able to manage that much more essentially. And we'll go into details on that as well. So next slide, please. All right, this is going to be a big one. So we're already 30 minutes in, but this is one that has so many topics that can be discussed. And I'm going to turn this over to Jatin. We're going to get into a lot more technical aspects of this, but you can see this is a busy slide. This is the foundation of what we're talking about, the central engine, the trinity of what we're talking about, bringing these together to establish a strategic framework for you to work in. So, Jatin, if you could take over here.
Yeah, sure. Thanks, Peter. This slide talks about, how payments can be integrated from different sources into APM. Once it integrates into APM, it goes to different new processes, great functionality, which we'll try to go in more detail. And then once it integrates to the APM, how we can integrate to MBC and send the payments out to the banks. So if we start from the left, from how payments can be integrated, it can be integrated from SAP. It can be integrated from non-SAP. So if I talk about the SAP from a payments point of view, the integration point for your credit transfer, for P&O process, you can directly integrate from F110 using the MBC connector. So the integration is very seamless. Doesn't matter if it's single landscape or you're connecting through the other landscape or with the hybrid model, which we were talking about. So the integration is very, very smooth through MBC, and then it can connect to the APM. Similarly, if you have treasury payments, depending on, it can be integrated through F111 for your cash management payments, for your, the treasury and risk management payments, through those transactions, it can be integrated. For non-SAP, APM has done excellent job over there. They have provided the converters where we can leverage, and integrate into the APM. Once the payments are integrated, SAP is providing the new function, a very powerful enrichment and validation process. So if you think about the existing process, right? If I go through one few common rejection reasons, the payments got rejected. You didn't have the right routing numbers, where for the SEPA countries, we missed the IBAN number. Instead of IBAN numbers, we were just giving them the account numbers. We had incorrect payment type. We had duplicate payments. We missed critical information such as purpose codes and so on. So we never had opportunity in the existing solution where we could flag those payments and before we send it to the banks, right? The only time was we received the negative acknowledgement from the banks. Hey, the payments are rejected. These are the reasons. We have to reverse this process, fix those, and reinitiate it, right? So there were never been an opportunity to flag those transactions upfront, right? Now with the APM, you could write your validation rules based on the currencies, countries, payment types, and there are a lot of additional parameters available. And you could identify if this is a mandatory field. You could enrich the data, right, based on your requirements from a specific counterparty banks. And if any things are missing, those transactions can be flagged as exception payments. That means the users have the opportunity now to fix those before we send it to the banks, right? So if you think through from a straight through processing point of view, it's a great achievement. You could increase your, straight through processing by having this functionality. We can go more detail, if it's required. The other great functionality, when you go through the enrichment process, it can go through your payment screening for your fraud and sanctioned party list. This has become a very common requirement, not only from a SOX point of view, but from your internal controls point of view, right? A lot of our customers are saying all the external payments must be verified against the sanction list before it's been sent to the bank. At the same time, we had some customers asking, our counterparties or banks can provide the same function. Why should we add that in the system, right? I think the critical question becomes is definitely the banks can provide that service, but it's not a good solution that you're relying on the banking partners, because if bank identifies this as a sanctioned transaction, they have to report it to the regulatory authorities or to the Treasury Department, which means it's a compliance risk, right? So what SAP has done is now you could connect directly through your APM, through your business integrity screening, right? So all your transactions can be connected through the API, where you could flag those transactions if those are based on your counterparty name, the country, the recipient name, and other factors. You could flag this transaction, and you could reverse those transactions before it can be sent to the banks. After that, it goes to the routing process. based on the polling questions, it seems like the customer may have the P&O transactions. They could have the payment on behalf of, it can have the intercompany. So when you're thinking about the common dashboard, which was not available in the previous legacy solution, there was not common platform. If you have any external payments, you have to go through the BCM. If you had any intercompany transactions, if you're using in-house cash, you have to go through in-house cash, or if you have to go through the FI transaction. So imagine there was not a common dashboard. You have to use so many different reportings. Now, once the routing is identified, APM has done a really good job on tagging those transactions with the appropriate scenarios based on the master data. In the previous solution, it was, IT has to manage this as a configuration, but again, that too was not available for all the scenarios. So APM has done, great job on identifying, tagging those functionalities, on a based with appropriate payment scenarios.
Hey,
Once depending on
Johnny, I'm sorry. No, I appreciate it. I'm looking at the time here and knowing that we
yeah,
only have 24 minutes and
yeah,
30 some
let's move on.
slides or something left to go. But I
Yeah,
wanted to, and these again, there's lots of detail here. I knew this slide was going to be one we would want to cover in detail. But looking at the amount of time, I think the audience can see there's a lot to cover here. There's a lot of information, a lot of detail. Depends on what you're looking at: inputs, outputs, transformation. All of that is in this platform. Again, there's a lot of material on our website. We're more than happy to have further conversation, but due to limited time, I would ask Arif, do you have something to add? Any kind of key points? Because I know obviously SAP has big perspective on this, so on what you think the audience might find especially intriguing.
Yeah, I think, as you say, there's no time to go deep dive, but maybe one thing is think about cross-bank area. Even though those has been not supported in the past, now is supported. So that's really a huge improvement, even though on the existing functionality. So the scope has been broader, and the API again is not watch the screening only. You can block in the API as example for trust pair, which could help you even through to analyze the IBAN number and so on and so on. So API is become the big innovation here, and the broader the scope of the core advanced payment management. That's the
Yeah,
two aspects.
I think the APIs is really critical, right? You think real time, APIs is real
Yeah,
time, not this legacy batching where
yeah,
processes in the old in-house bank were processed overnight. You had to wait
right.
for accounting entries, you had to wait for process. That's a different world, right? We cannot live in that world and be strategic today. We can't be in that world and have the visibility to information, data, real time that we need to be effective in the current environment. So terrific. Can we go to the next slide?
just to add, oh, sorry, Peter. So
Yeah, sure.
you don't have to implement for the customers who do not have the requirement for in-house bank. As you can see from the previous slide, you can still achieve a lot of benefits without the in-house banking. There's a
For
broad,
sure.
yeah,
Absolutely. And I think
yeah,
that's what we're going to get into, that we're going to get into these three scenarios. And ultimately what we're saying is this is a hybrid. Most companies are implementing a hybrid model. They're not using one of these scenarios and saying that's the only scenario. The whole idea is there's a flexibility here that allows you to utilize the system in the most effective way for the type of transaction you're doing and the requirements you have. So John's been throwing around the term PINO, right? It's payment in the name of. We'll talk about that. It's just really a centralized payment. You're processing it. I talked about that transformation engine that we're essentially taking in the payments from either a local system or remote systems. We're transforming them where necessary, and we're centrally processing them for dashboarding and management, etc. But we're paying out of the bank account of the affiliate that is requesting that payment. POBO, that's where we said we're making a payment on behalf of. This is an in-house banking structure, and that may be alien to a lot of you. I think this is becoming more and more a strategic trend, is leveraging in-house banking because it gives the foundation for the payments on behalf of and the internal payments, which is hugely cost effective and increases efficiency and liquidity management effectiveness. So in the POBO, like I said, you're making a payment for your kids out of your own bank account, right? So you're the central in-house banking hub facilitating those payments. Or if you're transferring money from one of your kids to one of your other kids, that's the way you can think about it. It's like, well, you're taking money out of one pocket, putting it in the other pocket, essentially moving it around. But this in-house banking concept facilitates that. So, John, if we could jump into the details of that, but
yeah,
keep
yeah,
it
sure, Peter.
we only got
Yeah.
21 minutes, so I would say,
Yeah, I will.
yeah,
Yeah.
we keep
So
it tight.
this
We're
again,
talking
we
about
have a
strategic
limited.
value, really.
Yeah, we have a limited time, so I won't go in detail. But basically, as Peter was saying, Pino is basically subsidiaries initiating the payments from their own accounts. We have two scenarios which we could leverage, and again, depending on your transformation strategy, who is owning your file formats and the landscape, we can determine the best model. The first scenario is the pass-through forwarding. So we had a customer where they were already initiating the payments in the XML format. So this scenario was making sense because we could leverage the existing file formats and still take advantage of the APM. But we had to come up with a hybrid solution because when you use the same file format and if there's a requirement for your payment approvals, the system doesn't allow the users to go in details, and if they want to stop any particular payments, they cannot do a partial acceptance or rejection. So we came up with a hybrid model where we had to add a BCM at the source system, or we had to add a BCM before the F110. So only the payments that got approved can come into the APM, and then they can get the same benefits as Arif and Peter were mentioning in the previous slide. The second process is the conversion routing, right? If the customers have a lot of non-XML bank standardized format, that's where we leverage the APM to use that functionality. We can take the file formats in the IDOC or any other formats, use the standard converters, take the advantage of APM, enhance the file formats into the XML, and then send it to the bank. So here, the users can take the benefits of the approval. So depending on the transformation strategy you may have, the ownership of the file formats, the APM is very flexible. We can choose the right method for the customers. We can go on to the next slide, please. Thanks. So this slide talks about the high-level process for the Pino. The process for the integration starts from the payment execution from the subsidiary, whether for accounts payable, if it's F110 or F111, then through the MBC connector seamlessly connects to the APM. That's your step number one. Through the step number one, depending on your master data, I'm not going to go in the details, but depending on your bank country, accounts, it can determine whether it's a Pino, it's the payment on behalf of POBO, and so on. The system is smartly able to identify that transactions. And then it moves on to the cash management, and that's where Arif was talking about the APIs. If you think through the legacy solution, once the payments are executed, you still have to go through and execute the payment batches. You have to send the files. The APM has now internal APIs, right? So it automatically calls the BCM. Users do not have to execute additional jobs based on the sequential manner, the great functionality of the internal APIs. As you can see, there's no financial accounting because we're using the same file format. There's no accounting. We're taking the leverage of the APM functionality. Then once the files are sent, the step number 3, we're sending to the banks, the same process whether you're using APM or not. But this is where the MBC comes in. I'm not sure whether we have time to more discuss on that option. But
I think we don't really, excuse me,
Yeah.
I don't think we really do. I think
Yeah.
that walking through that process, that's great. Everybody can see on the screen, and we'll be sending out this deck, but you can see the value proposition. Why would you do Pino through APM? Whether you're on a single instance or whatever your scenario is, why would you use these scenarios or use this process, this approach, this technology? I think that's important, but we don't have time to walk through each one. If we can go to the next scenario,
Great.
we've got about 17 minutes left. So
I think we can move on because Peter already. So basically, POBO is subsidiaries are executing payments through the header accounts. Peter already explained it works same as your external banks. External bank area owner for the POBO will create virtual accounts for all your subsidiaries. So I
think this one's worth talking about a little bit more if we go to the next slide, right? Because this one, as opposed to the other, which is really just straight through processing and effective processing controls, etc., this has a bigger strategic advantage. This in-house banking payments on behalf. This facilitates a centralization of accounts, the ability to reduce external bank accounts, massively reduce fees, increase liquidity, control your FX, your foreign currency exposures much better, improve your visibility to reporting, your fraud protection, all of this in that single platform, as we talked about. Leveraging these tools together allows you substantial increased strategic control. And when we talk about liquidity, the management of your your funds available to you to operate. When you think about it, in a world where you have a German entity that has some liability or needs to make a payment, it doesn't have the funds, and you have some American or let's say a French entity that has extra money, but the two of them are disconnected. That's a problem because the French entity has money invested, gets a small fee for interest. The other needs to borrow. It goes and pays a larger fee where you could just swap that money between them. Take your money out of your left pocket to your right pocket. In the old world, you had to pay fees to send that. Now you could do it internally through your in-house bank. So you can do all this much more effectively, cost effectively, and efficiently, give you more control, visibility over your funds, your availability of liquidity, your forecasting, which we said before, 93% of companies have lost money avoidably because of bad forecasting. This allows us to be all brought together. So I think it's really a critical topic. It may be a little bit extended that people are not familiar with it, but I think it's worthwhile to look into because there's huge value to get out of this.
Yeah.
John, if we can go to the last one, and I'm sorry, go ahead. Yeah, please.
Yeah. Yeah, so 2 points, right? If the biggest advantage on the IHV, I'm not going to, as Peter said, not going to go in the process flow, but the legacy solution was based on the IDOC. Now it's not based on the IDOC, so you're more aligning with your external format optimization. And the second one is the visibility. In the legacy model, the subsidiary never had the visibility to see what happens to the payments. With this one, once you get the positive or negative acknowledgement, you can push that to your source company code, and they can have a detailed visibility. So really great functionality from an in-house cash point of view.
I think that's great, right? The affiliate, where before the in-house cash, the in-house bank solution used to be called in-house cash. It was just a marketing name. It's the same thing, an in-house bank. But the new solution has much more visibility, real-time reporting. I think that is a massive advancement. Can we go to the next slide? We talked a bit about the intercompany, but John, if you can, I'd say jump past this and go to the process flow slide. We have about 14 minutes.
Yeah. So same thing. Yeah, same. Doesn't matter if you could see from all the slides, the integration point, it doesn't matter what scenario you have, starts from the payment execution. So same thing for intercompany. It starts from the execution of the F110, then it goes to the APM, and based on the master data, if the recipient accounts are belonging to virtual accounts, SAP is smart enough to identify and flag it as the in-house banking internal payments. And with the new functionality, it calls the API, right? It automatically creates your equivalent of F111. Because there is no F111 in this scenario, we're not sending any payments out to the banks. And with the new functionalities, it can automatically trigger your end of the day processing. Each subsidiaries will get their own bank statement where they will clear the subledger, and both the sides will book the intercompany position, through the end of the day process.
I think that's a key point, that automated end-to-end clearing, right? In the polling question, there was a good number of people that said they were interested in or focused on the intercompany settlements. The thing with the in-house bank, the internal payments, is that you get this end-to-end settlement, the clearing of the AP invoice. Not only that, but it sends the data through the in-house bank to the receiving side and clears the AR invoices. This is usually a very inefficient process, takes lots of time. Plus, you send a physical payment to settle those. Now you do this, you can do it internally with book entry or a single settlement of a single cash payment. But there's huge value here. Again, it's tied in with this in-house banking concept, but lots of value when you look at the different branches of functionality that can be brought into the in-house bank. If we can go to the next slide. So I think here, all we're saying is those three scenarios, which are only a few among many, because there's inbound payments, there's lots of other receipts on behalf, other functions that can be done through this central engine that will be substantially valuable. We can only focus, you can see we're already running out of time. We can only focus even on these three, but it's not that any one of them by themselves, it's this hybrid. You pick and choose the solution or the process and the use case that fits your need. Bringing them all together is really the effective way to leverage this platform. And I think the centralized security by design is critical. It allows you, no matter what, you're using these different solutions, but they're all under the same umbrella. They're all getting the same control, the visibility, the central certificate management, segregation of duties, sanction screening, fraud detection, all of this together in one cohesive solution, but even though you're using these different process flows or different use cases. I think that's a critical aspect. We're talking about unified platform that allows you to achieve all this centralized security regardless of execution model. All right, we go to the next slide. So actually skip this one. We combined them and somehow this was still in there. Here we go. So ultimately, we talked earlier about, and I'm going to get into this, and Arif's going to really cover this, the fact that data cleanliness is so, an organization and structure is so critical. If you're not aware, AI is obviously taking over and becoming a major influence in all aspects of business, and people are using it to enhance reporting. The problem is that if your data is sloppy, AI doesn't work very well. Gartner Group announced, put out in a survey, I think it was 73% of companies are expected to have their AI initiatives fail because of bad data setup, lack of cleanliness, lack of structure. Having that structure, single, central, availability of that data is so critical to AI success. So when we're talking about prior to a platform like this, you had your data all over, that spider web of connections and different formats and different structures to a new uniform structure, environment, common unified structure of data that can be accessed by AI. That then makes everything else available. It standardizes, it allows it as a prerequisite to facilitate AI analysis. And again, what does that allow or enable? Predictive cash forecasting, anomaly detection for fraud detection, payment optimization, vendor behavior analysis, working capital. All of this gets enhanced or is able to be enhanced by having this uniform. So if we go to the next slide, and we'll let Arif jump in here. So Arif, if you could talk a bit about how does SAP see this? Everybody's interested in AI. How does SAP see this? What are they doing in investment? What direction are they going? What's their strategy for approach to addressing this?
Yeah. Great, thank you. I mean, we have only 9 minutes. Let me put this one.
You can have all of them because this is an important topic.
Yeah, when you asked me about if I could join you, this slide was like AI will reinvent business application. And during the discussion, we decided AI reinvents. So
Yeah.
it's already there. It's not the hype, but rather the reality. If you are not jumping with the train now, it's too late. Simple. For all the clients on the phone, we are discussing about AI not for the sake of technology, but rather than increase productivity. If you go with the next slide, please, you will see only, and we will talking about distributed system, a lot of data, interfaces, and so on and so on. I do believe, and within the SAP strategy, only if you have a closed loop between application, which produce the data, you have to manage the data in a way, and only if you have a semantic meaningful data, you will get the best out of AI. So all in all AI, but if you only have accurate data, categorized data, and harmonized data, and that is exactly the way we do. If we go to the next one, and we compare to the, I'm not saying there's no AI cases in the market. There's a huge brainer in the market. They're doing a lot, but if you look to the silos, so they offer you a kind of agent here, agent there, but at the end of the day, you have to have orchestrator for the same. So because if there's no orchestrator, if you go to the music, Peter take the example for the money of family, I take the example for orchestra. If you go to the music, if you listen to the music, only if you have really, really orchestra, if you have someone who design the tact and then make sure those pieces are communicate each other, bring the data in the right manner, and then on top of that, you started to realize the benefit. So I will believe we will see a shift. I'm not saying we are there, but we built up the foundation. We are moved from the left to the right, and the foundation will be for finance, for spend, supply chain, human resource, and human experiences, customer experience, because at the end of the day, you have to have a kind of co-pilot, and this is our jewel. And for that, I am happy to get, first of all, your insight, because you are on the market, Peter and Jan. Yeah, you are daily at the customer.
Yeah,
What are
that's
the
awesome. I think your scenario or the kind of analogy to the orchestra, bringing all the different players together and make them sound good. That's really critical. That's what SAP is looking to do. We are seeing every day now that companies are obviously very aggressively trying to incorporate AI. I think the data, the lack of centralized data, the lack of structure is the biggest challenge that we're seeing confronted. When you look at a system like SAP where all your information is already there, being able to leverage that, I think, is critical. But even within SAP, we're talking about if you still have disparate systems, your information's in SAP, but it's in a whole bunch of different spots in different structures. You need to bring it together. And that's where I think the strategic use of this platform, APM, APM IHB, bringing it all together gives you control, visibility, and the foundational data structures that will allow you to leverage AI. Look, again, this may not be right now, this year, this month, but if you want to be doing this next year, you want to be leveraging the AI that's changing every day quickly. And if you're not aware, I mean, it's amazing how fast this stuff is changing. But if you want to be ready for next year, you need to be working on this year so you can take advantage next year. I think that's a critical aspect.
I think if we go the next one, that's just an example. And the next one, how we set up the foundation. So the foundation is like that. We have the data. We were talking about payment, but you can talk about receivable, payable, supply chain, everything. You can talk from the supply chain to the sales, and there is a lot of data. What we did, and we piloting over with Treasury. I'm happy to be, the Treasury is only the front runner if it's come to how we infuse the application into the process. And that's really, we started with, first of all, to improve the foundation. And back to the strategic initiative from the client, what Susan showed us in the beginning, it's no wonder, because first of all, you have to build up the foundation, and that's the application. With advanced payment management, with all the stuff we discussed, we have the foundation. We started to collect, harmonize, and create semantic meaningful data, and that's the data product using the business data cloud. This is a new way to collect the data, to organize the data. And Working Capital Insight app, which give you the insight of your wallet, your payment wallet. You know exactly where's my payment. And on top of that, we started to create agent. And one important agent is the bank onboarding, because that's a touch to advanced payment management if it's come to multi-bank connectivity. Streamlined guided procedure, how you onboard a bank. Acceleration, the time to the market. The second is the AI assistant payment exception analysis. Within the APM, we will apply the AI services which could help you to analyze what is the exception of the 110 and 111. Why I could not execute the payment? And the agent should tell me the payment method is wrong. And that's why you have to change from P to E. And that's exactly what we implemented and we released. Last but not least, you're on the cash now. You have your cash position and you would like to do something. You would like to do bank transfer. And that is exactly the cash agent. So in a nutshell, we built the foundation right now. We started to understand more and more the data. We started to bring the first agent in the market. We use Joule to orchestrate the same. And that's only the beginning. If you're not jumping in the train, I do believe, as Peter say, it's too late. You should start now. With a small thing, you have to ask yourself, what is the outcome if I apply agent? What is the outcome? It's not the technology, believe me. CFO will challenge you. What is the cost? What is the cost saving for you? What's the productivity increase here? So that's why make your mind if it's come to agent AI, data. That will be my takeaway from this slide here.
So
I think the next slide will be.
Yeah, I think looking, we got 2 minutes. I think the next slide talks about you're emphasizing what SAP, we can go to the next slide, what the takeaways are that SAP is investing in, that this is where it's going to be. This is where your value is. It continues to get better every day, every week, strengthening with the AI integrations and the process automations. So unfortunately, I don't think we have time to hit on those individually. If we can go to the next slide. I appreciate that insight though, Arif. That is really critical when we talk about what SAP is investing in, going towards the future and how you'll be able to maximize use of it. If we go to the next slide, just trying to wrap up here ultimately. Next slide, please. Okay, did we lose Susan? Okay, so we're not getting the next slide, but let me just talk to really the strategic direction, right? This is what we're talking about, APM, IHB. This is the SAP's path forward. We talk about MBC, We talk about the connectivity. This is the connectivity of the future. It's not customization. This is a roadmap aligned modernization. This is a strategic change, leveraging these tools with the new functionality, new capabilities that SAP has invested in to set the foundation for you to have your finance operation not be a technical back office execution, but a strategic partner in delivery of an achievement of the company's, the enterprise's organizational objectives, strategic objectives. It's not building around SAP. This is building with SAP. So when we talk about the window to modernize right now, now is the time, right? S4 HANA migrations are happening right now. And they are accelerating because a lot of companies waited and now they're making their move. This is the time to be thinking about all these processes to ensure you get a seat at the table, to ensure that the processes are incorporated. You're leveraging that functionality to maximize it. Then AI maturity is accelerating very quickly. You need to get in front of that or you're going to be left behind. Competitively, you're going to be left behind if you're not taking advantage of setting your tone now, setting your foundation now to take advantage of it. Regulatory pressure is rising. Again, this solution allows you to manage those regulatory impacts and issues effectively, and cost pressure, right? Cost pressure. All these solutions allow you to bring your costs down, centralize, increase efficiency. So we're talking about modernization is easiest during transformation. You're already making these transformation changes to S4. Why not take advantage of it now? Right? Not later. Later on, you've already too late. You're already boxed in. Try and leverage that now. That will close that ambition gap, right? This is the time to close that ambition gap between what you want to achieve and what you are achieving. Bring those together and rise to the occasion. So I think this is that's all we really have time for. If we go to the last slide, we'll send this out. There's some appendix here that's got some more very specific details on some of the old versus new that I think a lot of the technical people will be interested in. Ultimately, here's a QR code for scanning. We would love to talk with any of you and talk about these topics. We love these. We're very passionate about these topics, all of us. So if anything, you probably have an issue slowing us down from talking about them, but we wish we had more time. Unfortunately, we don't. We're glad. We appreciate everybody coming to listen to this conversation. I would like to thank Susan, SAP Insider, Jatin, and Arif for their participation. Really, it's been a great day. I wish we had more time. Thank you very much, everyone. I don't know, Susan, if you want to sign off, but thanks, everybody, for participation.
Absolutely. What a high energy session and such a relevant topic. As we leave today, I want to just say a special thank you to Arif, to Peter, and to Jatin for being with us today. We really appreciate it. And as I was listening as an analyst, just kind of understanding the urgency around this, three things, we want to leave you with three things that truly resonated. One, your payment structure today may not be your payment structure tomorrow. So you want to make sure that you're working with a partner who can help you and help you think about what the future of your payments looks like. Two, doing this is really a great place to quickly gain ROI. And for those of you who have had SAP S/4HANA migrations where the project timelines are longer, this is a great opportunity to see some quick return. And we know how much CFOs like a quick return. And then for those of you who have gone through the process of doing your SAP S/4HANA migrations, you need to be thinking about and prioritizing AI and the use cases within your business. And with that, we'll say thank you to everyone for being here today. And again, thank you to our guest speakers. We appreciate you for making time to be with us today.
Thank you, everybody. Bye.
Thank you. Bye-bye.
Thank you. Bye.